So we're looking at ACKER Transport. What it is it's a small transport company that provides logistics services for online traders. All work is provided on 30-day credit terms. The cash balance at the 1st of January 2014 was $31,600. The following estimates have been made in respect to the 3 months. Now it's given me some credit sales, so it's going to give me some income, and it's given me some expenses. Now the other thing that we also look at is we got it now. So what we're looking for is my cash inflow and cash outflow. This is what a cash budget really looks at. So cash inflow and cash outflows are what we're looking for. Now there's always some items in there that are not going to be recorded in our cash budget. So let's have a quick look. We've got some credit sales. Now credit sales doesn't necessarily indicate cash flow, so we're going to have to look at our cash receipts, which is what's further down our page here. We're then going to look general administration, utilities expenses, wages, loan principal, loan interest, marketing expenses, vehicle related expenses, depreciation on fleet and dividends paid. So what I need to do is I need to identify my cash items and my non-cash items. Now credit sales is a non-cash, although I'll need this information in calculating my cash receipts. Admin expenses, I'm pretty sure will be cash. That'll be a cash. And here we go, depreciation. Depreciation of fleet is also a non-cash. So I don't need to include this in my cash budget. So they'll always give you an item that's not there as well. Alright, now it says here some additional information. Past experience suggests that debtors usually settle accounts according to the following pattern. So my debtors, or my credit sales here, 50% in the month following the sale, 40% in 2 months following the sale, or the second month following the sale, 10% in the third month following the sale. It says the sales for the last 3 months in 2013 were as follows: 210,000, 282,000, 303,000. Now that's obviously information that I'll need. It also tells me that bad debts have not been an issue and all customers are expected to pay. Alright, that's good. It says that vehicle related expenses for March include an amount of 2,300 that will not be paid until April. So my vehicle related expenses here, this item here is telling me that it's 2,300 is not going to be paid until April. So I need to reduce this amount here by 2,300, which will make it 34,600. So let me just change that item there now to 34,600. So I'm reminded about that later on. It says my marketing expenses for March include 4,200 paid for advertising to be conducted in April. Well, that's okay because it's paid. So I'm looking for my cash inflow or cash outflow. So paid means that it's in the right month. And the loan interest will not be paid until April 2014. So this loan interest I don't need to include either. So that's part of my cash budget. Check. Alright, so let's start to prepare now my cash receipts. So that's the first bit I'm going to be looking to do, is my cash receipts. And this is my cash receipts journal down here. Now, we've got the months down the side here, but we've also got what we call the collection period over here. So let me just sort of divide my report into two bits. I've got a sales report, receipts. I'm just going to put in here collections. Doesn't look too good. Hang on, let me write it in a different colour pen. No, I'm paying the price for having a colour photocopy. So my collections. So that's when am I collecting my accounts receivable. Now it says that my sales for October were 210, 282 and 303, so let's put those in. 202, or 210 I should say. 282 and 303. And it says up here my estimated sales, or my credit sales, are 164, 270 and 310. So I'll need to put that into my sales as well. So what we have, 164, 270 and 310,000. Alright, now I don't need to put a total sales in there, so I'll just I need to just leave that blank. And now what I want to do is I want to work out, okay, if that's my sales, when do I collect this money? Now they gave us this piece of information up here that said of what my sales and my collections were. Okay? So now in a different colour pen, what I'm going to do is I'm going to say, okay, 50% is in the month of sale, 40% in the second month following sale, and 10% in the third month of sale. So if I look at my October sales, it's saying that 50% of my October sales I'll collect next month, which will be November. 40% of my October sales I'll collect 2 months later, which will be December. And 10% of my October sales I'll collect 3 months later, which will be January. So I'm just going to put a little 10% in that corner there, just to remind me that when I start doing my calculations, I'm looking for 10% of that number. Let's look at November. It's saying that, once again from my criteria up here, that if I sell it in November, I'll collect 50% in the month following, which will be December. So 50% of this I'll collect in December. I'll collect 40% of this 2 months following, second month, so that 40% will come in January. So I'm just going to put a little 40% here, saying that I'm collecting 40% of this in January. And 10% of November, I'll collect 3 months following sale, which must make it February. So I'm going to put a little 10% there as well. Okay. No, wrong way. No, it's over there somewhere else. Yeah, well. Alright, so let's have a look. We've got that one, so now we're selling in December. It's saying I'm collecting 50% in the month following sale, so 50% in January. 40% 2 months following sale, so that must make it February. And 10% in 3 months following the sale, that must make it March. Now I'm going to complete that pattern for all of these. So I'm selling these in January. It's saying I'm going to collect 50% in the month following sale, so that must be 50% in February. I'm going to collect 40% in second month following sale, so that must make it March. And we're looking at February here. So I've got collecting in 50% in the month following sale, so that must make 50% in the month following the sale. Now if I had April, May and June, I could continue on, but I don't. And obviously the March sales don't come into this at the moment, so we don't have to worry about that. Alright, so now I need to just fill my cash receipts in. So 10% of 210,000 is 21,000. $282,000 by 40% is how much? 112. 800. 10% of 282,000 is 28,200. 50% of 303,000 is 151,500. 40% of 303,000 is about 121,200, and 10% of 303,000 is 30,300. I'm now looking for 50% of 164,000, which makes in my book 82,000, and and then I'm looking for 40% of 164,000, which makes 65,600. And then I'm looking at my last collection of 50% of 270,000 is 135,000. Now I just need to total these to get my cash collections. So if I add that up, I'll get 285,200 or 300. If I add these ones up, I will get 231,400. And my last column, if I add this up, is 230,900. And that's how you prepare your cash receipts, or my cash collections. So these will be my cash inflows for January, February and March.